Hello and welcome to a new video on the HKCM global channel. My name is Philip. Today I will be taking a look at the NASDAQ index. I think it's an interesting point in time right now. We are closing in on all-time highs at the moment. So let's take a look at what is to be expected in the near future and on which side we are going to continue playing the market here. First of all, if you haven't done so, subscribe to the channel, leave comments, highly appreciated, helps the algorithm, helps to grow the channel. Let's dive in. Let's take a look at the NASDAQ index here. Currently, I think I already mentioned that in the last video we had on the NASDAQ on this channel, that I'm currently looking at hedging my long positions, which have been taken from the target zone down here. So we are plenty in the profits at the moment. So from the top of the target zone to the current levels, we have taken 30% in profits on the NASDAQ within this trade. And as we can see, we are currently within another target zone, which we are using to take up short positions, but only to hedge the long position. So at the moment, I'm not willing to risk selling my longs. I'm just willing to hedge them at the moment, and should we surpass the top side, which is becoming more and more likely. So if you should be surpass the 22,475 and the 23,229 level here within the NASDAQ, then I would also be letting go of my short hedges again, and then because then it is highly likely that the upside will continue, and it will continue a lot stronger, and will probably complete all of the upside move that the NASDAQ will be doing for quite some time then after it completes. But we will get to that in a minute, how far we can still go and how much potential there is still left to the upside. The biggest aspect I'm struggling with at the moment is simply the substructure of the move that has occurred since the lows here. So basically everything from this low to here, it is very difficult, especially the last part which formed here since end of May to the upside, and also the start of the whole move down here. It is not clearly impulsive in the sense being Elliott wave term, being a clear 5-wave structure to the upside. So I'm having a hard time seeing this here as a wave 1, wave 2 setup here on the bottom here. Very hard to count that. Let's just take a look at that in some more detail here. If we move in on the 1 hour chart, we can see that all those moves here, they are very clearly a 3-wave move, especially this part here, and also this part, although it seems to be an impulse. If we dive in further on the 15-minute chart, it doesn't get much better. So the thing is, that's where I'm struggling to count this move to the upside as a clear impulsive structure, being constituting of waves 1, 2, 3, 4, and 5. Because basically what happened here, if we ignore this part and we truncate the low over here, which is absolutely fine, then we are still having the issue that the next move here is not a clear 5-wave move to the upside. It could have become one, so we could have maybe formed a small 1, 2 and another 1, 2, 3, 4, 5, and then there should have been another 3, 4 and another high that would have made for a clear impulse from the lows. This didn't happen, so that's why I'm still struggling, and that's why I'm still expecting, despite the fact that we have closed in on all-time highs, that this move is probably just a strong but an upward correction within an overall corrective pattern that can still play out. And so that's the next point I want to get to. Which other corrective options do we have? Is it maybe possible that we have already completed wave 1 at for example here, or even down here? Because it raises the question, this move to the upside here looks if you look at it in detail, it looks very similar to this move. We are also having big issues counting this as an impulse, and in my opinion, it is clearly not an impulsive wave here to the upside, especially the starting formation here from the lows, from the target zone. And then also the rest of it is far from being clearly an impulsive 5-wave structure. So two options. Either we ignore this and we move the high to here, still very painful to my eyes. So I would rather still go with wave one being over here if this plays out, for example, but it makes not much of a difference. The question just arises, how much complexity can this corrective structure still gain? Yeah? Because initially, once we bottomed out here, I was clearly expecting this to be a V wave, the market to come down, form a new low. This happened. Yeah? Nevertheless, if we just go by the retracements that have been hit by the B wave over here, we can still make the case that this B wave, for example, could also just not be over yet at the moment. So, because if we extend this to the 161 retracement here to the upside reverse. So this is basically the level I've outlined here with the 23,229 points. So as long as we stay below this level and we don't surpass it, I would still, even if my target zone is overshot to the upside, I'm still expecting this to be a corrective structure. Above there, I just have to take it and we have to make whatever it's going to be here, but it's going to be very, very difficult to view it as a impulsive structure. But it could, for example, still form some kind of an ending diagonal or some kind of structure that could be playing out here. So there's still options. The only other option that would really help things at the moment would be to expect wave one to have concluded over here, or wave three. Both would be possible, to be fair. And then we could conclude that this is currently the first B wave forming, and this would give us some more space to the upside. But this would also mean that the B wave could come significantly higher, even above 26,222 points. And to be honest, at the moment, the market moving another 3,000 points to the upside, or even 4,000 points above all-time highs at the moment, I would be having a hard time viewing this as still being corrective action. Possible, but very, very unlikely for this to happen. So if we surpass 23,229, then I have to move to the expectation that we are in the final moves and that we are making a direct run for the final wave 5 of 1, or alternatively that this is just wave 5 or 3, but I would be expecting something to be concluded in terms of an impulsive wave here, either wave 1, which would be my primary, or alternatively the wave 3. This is also closing, the first levels, possible levels are also closing in fast, because 23,600 around approximately is not far off from where we are at the moment. So we can reach those levels quite quickly, and I will have to evaluate if I'm reducing the target zone, if I'm moving this, if I'm giving it more space here to the upside. So we will have to see about that, how things unfold in the next days and weeks. What is supportive for continued upside at the moment? We are definitely seeing signs that the NASDAQ is trying to take out the divergences on the indicators on the long term. So the 2-week is trying to cross up here. We are trying to see a up cross in the MACD. The RSI is coming back up. We are on the long signal again within the long short indicator. The momentum is starting to become positive again. We never hit negative momentum. That's also something to point out here. And we are also starting to curl up again on the MACD on the monthly as well. But we are still slowing down within momentum. But we are also clearly on the long signal here on the long short indicator. RSI is coming back up again. So this is going to become very interesting. If we are taking out those divergences, if we are coming back up, just as we did on the weekly, for example, which has now also gone back on the long signal on our long short indicator here, then things would be more supportive for a continued upside and for finalizing basically all of the up move within the NASDAQ and no other correction coming in the near future here. But beware, we are closing in on July, we are within the summer, so generally it is to be expected that some weakness will come into the markets, and then we will see how strong they play out and how far they can pull back the NASDAQ. Something else I would like to point out, which is not so much indicative for what is going to happen, but it's just, I think, an interesting side note here on the NASDAQ, because I haven't shown this on the English channel so far. I have shown this on my German YouTube channel before. if we express the NASDAQ within the M2 money supply, it is the only of the large indices that has managed to reach new all-time highs within this constellation. Yeah? Because if you compare it to the S&P 500, we are still far from the all-time high here. So we still have some ways to go percentage-wise. We are still 18% off those all-time highs that were formed around the 2000, 2001, and the NASDAQ has taken those out. And so, interesting side note, but it shows how strong the performance in the tech sector really has been, and how strong these stocks have performed also against inflation, against M2 money supply. Even with this massive increase in money supply over the last years, the NASDAQ was able to match that performance. The S&P wasn't able to match that performance. So just an interesting side note, but it shows how strong the tech sector is. On the other side, this is also something for me that I would be that I'm viewing as a cautious sign for caution here within the NASDAQ, because we have definitely reached extreme levels here. So finishing wave one, as mentioned, would trigger a large correction, probably lasting more than a few months. This could last 2 to 3 years even. We are closing in on critical levels here for a major high and a much longer term consolidation that we have seen before, and also what we have seen this year so far. It was just, basically it didn't take us long. So that was basically between December and April, the market was in a consolidation phase, and now we are back up at all-time highs. This move I would be expecting to take at least 12 months or longer to conclude. So there's a lot of signals to watch out, but we are also on the brink of the market pushing to new all-time highs and pushing and further breakout even. This will have to be seen within the next days and weeks. And then we will also see how the summer weakness plays out. Maybe there isn't a summer weakness as well. But in general, in terms of seasonality, I wouldn't be expecting the market to be too strong within July, August, September. So we will see how this is going to be playing out over the next few weeks. And just for a final recap, as mentioned in the beginning, I will not be letting go of all my long positions, especially not in the light of the risk on the upside at the moment. I have taken up hedges, and I will wait what will be happening now with these two resistance levels. If we move past them, then I will let go of my short hedges, and then I will also just be long again. So this is just, insurance at the moment. But we'll see if we need it or if we are just going to blast through and see a continuation of the bull rally that we've seen for quite some time now within the tech sector. Thanks for watching. I hope you enjoyed the video, and see you next time.